Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.
There we go. Good morning. Good morning, everyone. Welcome to another Wealth Coffee Chat, Property Management Edition. Hello. If you haven't seen me around before and you're wondering where Jason is on Wednesdays, I take over. And my name's Cash Shosted, representing the R&W Plus team, guys, and specifically property management. If you haven't sort of, like I said, heard me or been to Wealth Coffee Chats before, if you're new, welcome. And my experience goes back about 13 years now in the property management world. So what we do is we take over on a Wednesday here in Wealth Coffee Chats, about 10 past 8 as you guys are joining on, and talk all things property management and how to sort of keep you safe and help you maintain and hold your investment for that long period. So we'll get started straight away. There's a few of the regulars already on. Luke and Chris, g'day, guys. Hope you're well. And Bunty's on as well, mate. Thanks for joining as always. So good stuff. So team, as a few of the others join us here this morning, I thought I'd just talk about 3 things you might want to know, that you should know when leasing out a property when it's new development. So I know a few of the guys there, Luke and Chris, have sort of been through this, or Chris is about to go through this, I believe, down at Spotswood. But, I just thought there's 3 things that I've sort of experienced over my time, specifically with new development. I know a lot of you guys purchase your investments through new development. Could be apartments, could be house and land, could be townhouses. And so what we want to just do today is talk about these 3 things that you might want to know, that I think you should know, what goes on and what's, fear from fact, so to speak. Maybe let's talk about some things to expect. Let's talk about what happens when it goes well. Let's talk about some things that you might want to do to avoid some tricky situations. So we're definitely going to talk about that today. Brendan's on as well. Morning, mate, to you as well. Thank you for joining. Awesome. So as I said, team, we're going to talk about these 3 things now here, and I'll just pop something up on the screen. So throughout this morning's little conversation, any questions, just pop in the chat for me. Always love a bit of interaction and banter and some questions. Sort of helps me, give you guys some information that's more relevant. So number 1, the first thing you want to know with new development, and just put it in the chat for me, team. I know Luke and Chris have, and obviously purchased some stuff in new development. Sort of, we're talking maybe some apartments, some high rises, things like that, boutique developments. Let me know in the chat if you've ever purchased a property like this in a brand new development. Maybe when you settled, there was a number of properties settling at the same time. Be good to get an idea of where you guys sit on this. Pop that in the chat for me as I kick it off. Because number 1, the thing you want to know and understand is defects. So I've gone through an experience recently where, maybe everything didn't go our way. And, when you sort of reflect back on that, you think, well, hang on a minute, I couldn't sort of influence or control a lot of those things, in which case, am I right to sort of suggest that it went my way or didn't go my way? So, there's some things around defects we've got to work through. And probably the number one thing I'd say is, look, defects are just part of the process. Are they perfect? No. Will they be perfect? Absolutely not. 13 years in this industry, and probably the last 5 or 6 years specifically, being involved and experiencing, working with developers and builders and clients like yourselves in this sort of stuff is, this is a normal part of the process. This stuff, and I don't think I've seen a property where there hasn't been any defects at all. And so what I'm here to just sort of say is, look, defects are part of the process. What do we need to do? Well, we just need to understand that I guess the most important thing through defects is that you guys, as the client leading up to settlement, that you have engaged a building inspector. Now, some people will say, well, hey, what do I really need that? Can't my property manager do that? Hey, listen, your property manager probably could do it. Here's the thing, though, they're not qualified building inspectors. So even with my experience, I always suggest to owners, let's just engage the experts. Let's get the experts on your team and let's work through it. So number one, what is important is you engage a building inspector. Your property manager can then help you manage that process, that list, post-settlement through that phase. And just understand, guys, all the builders anyway that we work with will have a certain process. Now, each of those processes is a little bit different in how they handle defects, in terms of how it gets reported, how it's communicated, and the time frame in which they go back to obviously complete the defect. There could be a 1 to 2 week thing, around settlement, and then it could be a 3, 6, 12-month process on the back of that. So what we're just saying here is, defects are part of the normal process. Certainly engage a building inspector and then just understand what that plan looks like so you can get some ideas on timeframes. Number two, the second thing you kind of want to know when you're leasing out in new development is the number of properties settling in that particular development from investors. So when you settle your property, are you going to market on your own? Are you going to market with 3 other owners? Or are we going to market with 30, 60, and in the case about 6 months ago, there was up to 100 apartments in a complex. So we need to obviously understand that. As Justin jumps on here and says, good morning, mate. So good morning to you, Justin. I thought I'd just pause there quickly to say hello. But, team, we need to understand, okay? So if you don't know, you need to ask your property manager, right? I believe it's my job to go and get that information. I certainly want to understand who I am going to market with, who am I competing, because we know we can look at vacancy rates across the city, then we can dive down into the suburb, and then I call it that real hyper local market where it's like, it's me in this development of 20, 30, 60, whatever it may be. Jeff jumps on as well, and Jeff will probably pick up really quickly where I'm going this, because we did something like this with Jeff about 12 months ago with new development Mix SI as well. So g'day, mate, good to see you. So we want to understand how many investors are actually settling at the same time, because you'll understand obviously things are going to settle in around the same time. So why is that important? Well, it's certainly going to help you with you creating a leasing campaign. It's certainly going to help you create a marketing campaign, because how you lease one property on its own is very different to how you would lease 30 in bulk. And I'll tell you a funny story in a second on what's going on there. But it also helps your property management team with the commentary with the prospective tenants of the open homes, right? Because remember, we've spoken about open homes before. There's certain dialogue we want to put out there. We certainly want to, create a sense of urgency, maybe when there isn't a sense of urgency, given there's a lot there, but also helps you guys understand some timelines and create some buffers. So number one, defects. Number two, let's understand how many are in the complex, in the building, going to hopefully be rented in that period of time. Number three, agent of choice. So I'll tell you a funny story. So, in an ideal world, certainly from my perspective anyway, you want to certainly, I suppose, have a pre-settlement leasing campaign 3 to 4 weeks out, right? Like if I wave a magic wand, that's what I would love on all new development. Now, does that go my way? No. Sometimes it does not go my way, right? So what are we going to do? Well, I can't control building delays. I can't control, the insurance risk from the builder that doesn't want us to hold public open homes, right? Clients might have finance delays or some challenges in there, which then is a domino effect because we cannot confirm lease start dates. So there can be some challenges in these things. So sometimes the magic wand conversation just doesn't happen. It's just not possible, right? So what do? Do we give up? No, we don't give up. What we want to do is get clarity. So again, it's part of the journey, right? It's part of the journey. Now, with agents, it's sometimes in new development when we've got, 10, 30, 60 apartments, it can be a race to the bottom, right? Agents want to get paid faster. They want owners to get paid faster, which is all well and good. But what happens is the $600 a week market appraisal and market rate turns into 520, 530 very, very quickly. And we've certainly experienced this on a number of occasions. So sometimes, we can have the information in front of us and we can understand that we need buffers and things like that. And we might have a really good strategy, and then the agent comes in and all of a sudden ruins the plan, right? On the flip side, here's what happened to me about 48 hours ago. So up here in Brisbane, we've got part of a new development. Now, we're not leasing the entire building. There's a few agents in there. And the agent actually come up to me and said, hey, I think you should raise your rents. And I said, all right. I said, no problem. I said, tell me where you're at, what you're doing. And basically the suggestion of where the rents might sit was, in upwards of $100 per week. Now, I've got two choices here. I can, one, agree and tell the owners, hey, I'm going to get you $100 a week more. The problem I found with that was there was no evidence to back up that commentary, in my opinion, right? In my opinion. So, if I was to do that, am I doing is that in the best interest of the client? Potentially not. I think in that scenario, I'm just creating a space of vacancy for our clients, which means no cash flow for you guys. So I think you guys can agree with me. That's probably not the way to go, given the prospective tenants in the marketplace out there. Again, given there's a few owners in that building settling, may not be the right angle to take in that space. Now, I'm all for pushing rents, as you guys know, but I think we need to find that healthy balance in that space. So it can be a race to the bottom, depending on which agent you have, because they've got the commentary wrong, the strategy wrong, and all that sort of stuff. And then on the flip side, we can be pushing too far, which can kill the campaign and create vacancy. And as you guys know, if your property's vacant, it's not producing a dollar, which we don't want. So here's what I know, team. Last 5 or 6 years, as I said, doing new developments, and I've done things from 5 apartments to upwards of 60, and I've seen things at scale at about 100 as well. What I know to be true is usually that first tenant, you just want to get that really good tenant secured to create that cash flow. What I do know is in year 2 and year 3, and I'll give you 2 examples in a moment, that's when you guys see the rent growth. So I want you guys to just sort of plan for the future, understand, remember why you bought this for the long term. It's a marathon, not a sprint. Now there's a couple 2-bedders down in Flemington and Ascot, and Jeff might chime in here because I haven't looked at yours, Jeff, but I've seen some of the I remember at the time the 2-bedroom apartments there were renting anywhere between mid and high 5s from memory, and now we're sort of starting to see a few of those properties come back on the market because the tenants are vacating, and they're sort of pushing upwards of into the early 600s, right? So pretty good uplift there, which is kind of interesting. And I think that's only in year 2 of ownership. Another example, maybe you guys know, maybe you guys don't remember. It was about 3 years ago now, a building called the Palmer up here in Windsor, so inner city suburb of Brisbane, just down the road from where I live actually. And at the time, those 2-bedders were leasing for about, maybe it's year 4 actually. I'm trying to think now. I'm trying to think it was pre-COVID. It was a bit of a weird time, right? And those 2-bedders at the time were leasing anywhere between sort of that 490 and 520 mark. Today, that same property is leasing upwards of near the mid 6s, right? So again, really good uplift. So sometimes we want to, ensure that year 1, the cash flow might look a little bit different to year 2 to year 4, because in my experience, year 2 to year 3, specifically anyways, when we start to see rent growth. So we kind of want a year 1, we just want to get that tenant. We want to have some really good foundations, get things going, and then obviously move forward from there with your property manager to get that to get that rent increase. Jeff says up to monthly rent $600, so about $2,600 a month, Jeff, if that number sounds about right. In that space. So, what's the three things again today? What's the summary? What's the point of this morning's Wealth Coffee Chat? Well, number one, defects are part of the journey, team. When you are buying in new development, just plan for it. Get a building inspector. Your property manager can help you manage that process. Number two, know your numbers when it comes to how many investors are in that complex. It's really important, not just from the property management side of things, but I think for you guys as investors, because it can help you make better decisions when it comes to the rent per week, the marketing, the leasing strategy, buffers, timelines. You can start to piece the puzzle together. And number three, obviously, just understand, the agent of choice is going to be critical to the outcome, from the positive or the negative. Cool. So that's a bit of my message this morning. Hopefully that was helpful. If there's any questions, obviously pop in the chat as always. If you've got any suggestions on any other topics you guys want to hear into the future for property management, I might try and bring some guests on maybe in the next few weeks for you guys. But so anything you guys specifically want to talk about, of course, let me know. Brendan's jumping in here as well. A couple of questions before we go. Hey, what are your thoughts around putting buffers in place for lax? Yeah, I mean, look, it's all relative. Yeah, Brendan. Whether we're talking buffers in place for sinking funds, maintenance, vacancy, insurance, compliance, all that sort of stuff. I put it into one bucket. I suppose it's potentially sitting down with your advisor and having a chat around what that looks like. Go to the people in your team who have done it before. I certainly think it's a good idea, to answer your question, because you're right. When new development is there, we've got to build up the sinking fund over a period of time. Now, you'd like to think that given it's a new development, there is no significant works needed to be done in the first few years, right? Things are under warranty and all that sort of stuff. But yeah, certainly I would say yes, great idea. Definitely have a buffer in place. Excuse me, what that might look like. Potentially sit with the advisor, and they might be able to give you some more advice and experience in that space. But definitely a good idea. And Jeff says just got 690 to 720 in Goldie. Oh, good. New construction, high rise. Awesome, Jeff. Good stuff. I love to hear the good news. Looks like rents are continuing to rise, team, despite everything else. So good stuff, team. I might pause there and let you guys get on with your Wednesday. Thanks for having me again, hosting Wealth Coffee Chats. Hopefully we'll be around next week. I'm sure we will be. And as always, thanks for playing full out. You guys have a lovely Wednesday. And that's it for me today. See you guys next week. Don't forget, 8:10 tomorrow. Jason will be back. See you, team.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.